Welcome back. This is Carlos from Omegavus Trend and the Forecast Mastery with another forecast follow-up video, finishing the week of October 31st. Happy Halloween for those of you who celebrate. All right, so following along from yesterday and this week. So as a recap, this week we had a little bit of a challenging process, right? I'm on a daily chart right now. We're still holding the same positions that we started yesterday, but we gave it 3 shots on swing trading. From the swing trading side of things, we gave it 3 shots this week. And all boils down on a gap that happens in this area. Let me switch to a 4-hour chart so it's easier for everybody to understand, right? So this is the gap that we were looking for. This was my first stop at this instance in this area. So technically speaking, as the market was going down, notice here there's a very key factor here. If you can go check the video, I think from Sunday, you will probably understand what I'm talking about. This is a zone that I was looking for a clean break below the zone to continue on the further down, and I explained clearly we need to see a clean break on the way down, probably about in that 1-hour chart. And that will suffice to give us a clear understanding of a short position alongside with the full validated negative, reversal negative NQ reading on the OT. That didn't happen. However, I trusted, I felt a little bit more compelled because of the multiple analysis structures that I was following into the swing side of things, and I jumped on board without confirmation, and basically it didn't work out for me. So I lost about 70 points in that area. Okay, same thing applied the very next day. So the market just not the very next day. The market just started to continue higher. If you see these red lines, these are my breaking points, making sure that the market revert and close below those. We call it, transition points, if you will. For those who are following order flow, those are rotation levels. It's like a middle point rotation. Order flow where sellers basically are beating up the buyers and basically just continue further down in the auction. So I was following along. You can see I left them there. Small one here, all the way to 15-minute, 1 hour, 1 hour, 1 hour, 4 hours. And this was a zone that I was looking for a clean break. Didn't happen. Continue further higher. And this was I left this one in here. I'm going to go into a 1-hour chart. Let's see if we can find it for you. There it is. This right here was my transition to a buy sector. And the reason I left that in there, I'm going to show you in a moment. You see that typically everything that you see green is what we call slingshot. We're absolutely trading against those levels. These are massive decision points levels. The market didn't actually broke. It did kind of by proximity, held into it, came back. Zone was not taken. The transition point of the order flow was not taken, and they went and closed above that strong opposing, right? This is a resistance level. That didn't happen. So for me, that was a massively bullish outlook. So I waited for a pullback, hoping again for them to come back to the same area, but the same level held strong for a couple of times. So I use what we call we call it a pivot step. So we say a trend line formation, if you will. Once the break area happens in this area in the morning, basically we were all pretty good looking for long positions. So we definitely went and took the long positions. And this conglomerate here that it has another slingshot, that was the take for the potential upward movement. I'm not going to bore you because since I didn't actually share this, it doesn't make much sense to you, right? I don't like to share things that I couldn't show before it happens, but I'm just explaining the logics behind it. So in this one, we took a clear burst into the upside, and it actually provided about 103 points, I think it was, until on the trail stop, we got stopped out. That was the only play, nothing else. And from there on, I traded to short the market. Once again, back into the 4-hour chart. Let me see if we can find it. Hold on, there you go. And in this instance right here, I did the exact same mistake, right? Let me paint the picture for you right here. So this is a 4-hour chart. The market opened, left behind a high, opened, went up, and basically went up. And this is a 4-hour chart. I was trading against this zone. Let me see if I can shade it for you guys. Here it is. So the market went up on 1 hour and 50-minute chart. They went up, come down, and indeed they were showing some intent to continue down, and I shorted the market again. Instead of me waiting for it, the OT was not validated, but I was really kind of confident, cocky me, right? That indeed this was going to be on a 4-hour chart a reversal. This time around, I lost, I think it was 77 points, to be very honest with you. Around that area. There you go. Boom. And this bar came here and basically in the overnight session took us out. That's fine. It would be. So in reality, this was the second intent of a short position that didn't work out back to back. 70 points in one, 77 points in another one. Awful, right? But on the way up, I managed to recover the first loss, but I'm not going to count that, right? But I'm looking for short positions. And finally, this all conglomerate of craziness happened in the last couple of days. We waited for all the reports. I'm going to show them in here. If we take a closer look here, I'm going to show past events. We were waiting for the federal fund rates, press conference, and all these beautiful things, high impact report to come out. Today we got an employment cost index and so on. That happens this morning. That's fine. But this was for me the mover, the shaker mover that I was expecting. And this created this conglomerate of uncertainty and unbias into the market. Okay. So anyway, given these circumstances, right, I'm going to go back into the daily chart. And this is the one that I'm telling you right here. So the market went up. Right, this is a daily, and once we took the previous day high, and the market start progressing on the way down. These are my zones, right? These are the zones that I was hoping for. I just want you to see it on the daily. I'm going to bring it back to 4-hour chart, boom, and this is how that zone looks like. Okay, that's all I want you to pay attention to. And on 4-hour chart, doesn't look like much, okay? So yeah, fine. The market just went up, down. So what do you talk? What's going on in here? As the market progressed and kind of in a fake up move to the top side, right? Mind you, my stop was a little bit bigger, around way over there. Anyway, the point is, once we cleared the close below the zone, let me go into a 1-hour chart now, see if we can find it. Let's see. All right, here it is. So this is a transition that I was talking about. So right at kind of the end of the day, the market just pulled up, came back down, and basically I took a plunge below this micro zone here, which is that on average, that entry that you saw right there. And my stop was supposed to be kind of around that area. But given the circumstances of me getting stopped out twice, I extended the stop a little bit further. Okay? I'm just trying to explain you the concept here of exactly where is it that I was going to place, and why I went risking. It was about 1,200, to be honest with you. There you go, because that's my maximum allowance of risk. Okay? And that's where the stop should have been. I went back to 4-hour chart, right? And this is so far since that management or that placement from Wednesday that I've been holding on to it. As the market progressed, I saw that they clearly basically closed below this zone finally, right? In this bar right here. I managed to then trail the stop and start tightening things up. Okay? And I had 6 contracts. Liquidated half of that. I'm sorry about that. And basically from then on, I'm still holding the position so far on the overnight session. I apologize for that. So given that circumstances, I would like to extend the process of for you to see how powerful it is to know exactly about all these zones. So this is the original zone that I was waiting for the entry. I'm going to extend this into the future now. Look how powerful those zones are. As the market progressed, came up, and it's just rejecting it, creating an outside bearish bar. And mind you, this is a 4-hour chart. Okay, so long-term perspective, this is exactly what I'm expecting right now for the market to continue. So I feel confident now to move my stop just slightly above that area. And look how the manage of the risk came very more narrower, right? Allowing me to keep going, letting it do its thing until the end of the day. And at that point, I will make a decision if I close my positions or I can hold it overnight. In order for me to be able to hold this overnight on the weekends, though, I need to possibly close one of these 3 micros because I don't have enough funds in the account in order for me to hold 3 positions overnight. I can hold 3 positions and 4 positions overnight. What I can do overnight, we don't know what could happen. So I need to minimize the risk. Perhaps even maybe just consider keeping 1 contract. If I'm trusting the fact that these guys are going to keep going and perhaps come down and finally, back to the original plan since the beginning, go fill this gap. That's all I'm after. Okay? So this is a key factor here. So my risk factor is that much at this point with the potential, which we don't know. These are targets. You see this slingshot? That's 1 target for 311. That's when we took some of our positions. You see the purple level S2. That's another target by the tick. It's awesome. And I believe these were already here. If you might want to check the previous videos, you might see them, but the zones are still active. And this is the original intent of filling this gap for about 575 points. Will this happen? I don't know. It might happen, might not. But the point is, the beautiful thing is I'm just placing 1 trade, right? So in recap, I try to short the market 3 times this week. 1 trade got stopped, 70 points. 2nd trade got stopped, 77 points. And finally, the 3rd is the charm. And this one, so you can understand, produced a total about 414 points. I'm going to round this out at around, let's just say 400. And if you bring the calculations here, right? 77 points plus 70 points is 147, right? I'm going to multiply that by 5 contracts, right? 735 points, okay? So that's interesting. So I'm down 735 points in total. All right. And in this instance, right, the first target here was, I took 6 micros this time around because I needed to clear some on the way down. So I'll show you the 3 targets down. 79 points on the first one. Let's do that. So I'm doing this together. 79 points all together. So I got 6, right? So in that one, I have 79, times 2 contracts closed. I made 158. Then, put this away. I went into 300. I'm going to round it out. Not even going to, let's just say 310, right? That is basically what we have so far. Hold on. So where was I? 158 plus 310. 158. I'm 468. And the next one, right? The next contract was, I think it was 403 or 404. I'm going to round it out to 403 based on the target. I never put my limit right on the line, just above that, right? So if we take that plus 403, it's 871. You see where I'm going with this, right? So if I take 871, right, and we deduct the 735, I just made a profit of 136 total. I hope you're understanding the power of what I'm trying to accomplish when I'm trying to switch for swing trading. Mind you, you need a lot of capital to trade, about 3,500 per contract in your account so that you can hold a position overnight. But if you do, you don't need to load up with 5, 6, or 7 contracts or 10 or whatever, right? What you can do is lower the amount of contracts. My suggestion is to bare minimum do at least 2 to 4 so that you can manage the trade and accomplish what I just showed you. I shorted 6 on the top, right? At that moment, right? I was risking a little bit more, but I mean, it is what it is. It was within the confines of my risk assessments. As soon as the market moved, I took a very immediate target opportunity, 70, 79 points, and closed half of the positions. I mean, almost half, 2 of the positions. Then the other one halfway here, right? And then the other one halfway there. So that's what I'm trying to go for. I think it was 1, 2, 3. I'm sorry. It was 1 here, 2 here, 3 here, leaving 3. So that pretty much will give you the math, if you will. I might have messed it out, but you got the point. So you have a plan in play. You follow the plan, and you manage the plan and the management of the trades accordingly in those levels as you see it fit. And that's exactly what we're doing right now. We're just plain and simple holding and steady. Okay? Where basically I'm just scratch from the week. I haven't made any profits. Okay? Maybe a little bit. Given the circumstances of the long position of the break of the triangle formation, or what we call the pivot step up. That was it. It was only 80 points, 80 or 80 something points. And that was not in all total contracts. So I went long in that instance, since I was still focused on going short. So I think I went with 4 micros only and liquidated half, and then 1, and then 1. Same thing, nothing changes until I got stopped out on the trail on the last one. And then I waited for the short. And that's where I'm at. Okay, so I just wanted to show you the power of what we're after, and why is it so important for you to probably expand your mindset into considering yourself into the swing side of things. It doesn't mean you need to hold the positions overnight, but you can treat it as an overnight session, right? You can treat it as all right, I'm going to try to analyze the market in a 1 hour, 4 hour chart and manage it in 50 minutes. So you create a hybrid and hold that position throughout the session, right? It requires more patience, more, that's what it is. More patience and trust in your system. Don't change or deviate the system. If many people by the second stop would have been throwing the towel, oh, this doesn't work, blah, blah, blah. Since I'm a forecaster for over 20 something years, 29 years now, I already knew that the market cannot move in one single oscillation move, not in daily or 4 hour chart, without taking a breather. It's not a healthy market. And the fact that they left behind such a big gap, this one right here, this is a big gap. We're not talking about a 20, 34, 50 points. This is 120 something points that no transactions was taken in consideration right there. They have to come back and fill it eventually. So I'm planning my potential. I'm not saying that the market's going to crash. I'm just saying they need to come back and rebalance back to the mean. And from there on, potentially go all the way back in, reassess the whole thing, and come back up. Okay, that's what I'm after. So I just wanted to give you a full scope of expectancy, what I'm doing, what not, and how did I went up and treated the market with good, bad, and ugly. So it wasn't a winning week so far. Yes, I made some profit, but I got my ass handed to me not once but twice. All right, but I did not change my strategy. I did not change my perspective, and I did not change my philosophy. Right, I'm sticking true to it. And that's basically the whole concept, right? Now, one thing that I didn't said is, while that wasn't working, we were going into a potential short position on gold, on those areas. Okay, so on the breakage point of this zone, let me take this one out of the way for now. This microzone on the way down, I took this opportunity to short the market on this way down. Okay, so that was key for me, right? This is a swing trade level for daily. And then as soon as they came back and broke above it, you can see it right there. I've been trading the stop now. Right in there. The market continue further down. Initial stop on swing side of things will be a bit further down like such. Market held in this micro zone. Bounce. I haven't changed. So I held the loss. I'm still holding it. Nothing has changed. I'm just holding the loss. Trying to go through with it. And as the market just came back and closed above that level again, now I'm tightening my stop, right? That's basically all I'm doing. So this trade hasn't actually panned out. I went long, following my system. Nothing has changed. Placed a stop below that swing zone, but I noticed that they left this manipulation liquidity at the bottom, trapping sellers at the bottom. So I might as well put my stop further down there. That's making sense for you guys? Once the market came back and closed above that level, I went long, right? And placed my stop right there. Market came back. I thought I was going to lose, but it is what it is. I'm not changing parameters or anything. I'm just saying, so be it. All right. And then the market just come back and it's just battling through as we speak right now. Now, in order for this to work out, I have this massive close resistance point. But guess what? I went long for contract because I can't go heavy on micro gold. You got to be very. This is hard in swing trading. Even micros on gold is hard, so be careful about that. I can only do 3, 4 the most. Okay, and now boom, I'm just waiting for the market to continue. So as soon as I saw some profit approaching to the zone, I liquidated basically 2 of those 2 of the 4, and I'm holding the last one. Okay, so I was risking, I think it was close to 5,500 first. Anyway, the point is, this is where we're at right now. Okay, I'm gonna just keep it as it is. I'm on a 4-hour chart. Okay, so again, that's the power of creating a portfolio and hoping for the best, right? And lastly, there's one position that is not working out for me yet, but I'm going to show it to you. And I think we've been talking about this for quite a while. This is taking almost 2 weeks now. We went long. You know the process. Market went down, blah, blah. Once they broke the zone, again, I'm following my system, not changing anything. They broke that massive support. They went long, blah, I looked short, blah, blah, blah. I didn't took any trades here. Once they broke above it, there you go. Clear. Entry. Stop is going to be on the other side of the zone again. I thought I was going to get, again, stopped out. No, I'm still in it. This is a massive support zone, and it's holding steady. These are my targets up. So as we went long right there, that was the first iteration of a target, and I kind of missed it out. So I should have closed 2 out of those 4, but I didn't because I wasn't paying attention. And I couldnCouldn't leave an open order there because if I left an open order, I might have get stopped out. That order would have been floating. It's just a mess. So anyway, I made a mistake there. So I'm hoping that eventually I can see the OT here mostly bullish. And that's what I'm hoping now, that the market will just keep going. And these are the resistance that I'm aiming for as targeting. I'm trying to aim for this slingshot on the top right there. That's the plan. First target, which was hit, and I missed it. Second, third zone is a target. Third zone is a target. Second zone is a target, and third zone is the final target. From there on, I might wait, hopefully, for a swing, and these would be the targets further on an extend for those. So that's basically what we have as a portfolio, okay? And now, why am I holding a position back into the MNQ? Because if you notice here, by correlation, the VIX is massively positive. And if you don't know anything about correlation, if you join as part of the OT, we're doing these live Q&A calls where you can basically learn how to read the market. This is a tool not for trading from it. is a professional scanning momentum trend reading tool that validates momentum, commitment of traders behind transactions from all time frames at once. Once you learn how to decipher with our help how to read it, which is simple, everything is going to change for you. All right. So honestly, you're missing out. And I'm going to explain. This right here. All right. Let me show you. From M1 to M15, this is short term. Short term. Mind you, scalpers, day trading, a couple points trader here and there. M30 to daily. These are big leagues, big whales, right? These are the big leagues. These are the ones who tend to gravitate to hold positions overnight. Once you start seeing the bleeding from M15, let's just imagine this is a middle ground right here. Once you start seeing the strength of the short term bleeding into the big one, that is a potential transition, right? Or a potential transition happening. You match this up with your analytical prowess or processes or your system, and you're saying, oh, okay, VIX is negative, so that means that all indices should push higher, including stocks, by the way, or equities. So you're saying, so that means forget about, even if these are not ready yet, forget about this. Just by looking at the VIX, you're saying I should be looking to go short indices, right? Or equities. That's all you have to do. The second step, you're saying, all right, let me see how strong this is from M1 to M15. And you can say, oh, there is a unism, right? They're holding hands in one direction. These guys are pushing further downwards. But bro, this is going up. Hold on. And this is the key. If you don't get this, you're missing. If this is the key, this is positive, indicative that the indices eventually, that's a key, has to push down. And I'm seeing the lower nodes starting to push downwards. And I can see that now negative numbers are bleeding into the bigger time frame, slowly and steady. It's like a cancer, right? This means that is a highly probability that this massive bullish momentum is starting to gravitate, rotate, and move on into a negative ground. If you find this insight before everyone else, and I promise you, 90+% of traders will never see this the way that I'm explaining to you. This is not telling me go short now. No, I'm saying I'm going to be looking for shorts. Then, only then, I switch my mindset to a analysis. I did my analysis in 4 hours. That's my zone. Drop to 1 hour. All right, the market just did a massive rotation here, blah, blah, blah. I'm going to take the short position, place my stop a little bit further higher than that, right there. And let me fine tune this. Let me go into a 15-minute chart. And in the 15-minute chart, let me go this way. I'll wait for, I don't know, the 9:30. Where was 9:30 this day? Right here. 9:30 is right here. So I'm going to look for opportunities to go short and look at this massive sell-off right here. Okay? Oh, but the market came back up and then reverted back. Yeah, they did. But you need to pay attention, right? You got to be paying attention to where those press conferences happen. So today, this day, Wednesday, the trade setup should have been after 2:30. Logics. You're not going to be trading before a high impact report, and even less on the Feds. Come on, right? So you wait. And then, all right, 2 o'clock happened, blah, blah, blah. This is the whole craziness happening. That's when you basically take the trade or position yourself. Or start looking for setups in your system, whichever that might be, and then hope for the best. The very next day, if I would have done this like I typically would have done, I got stopped out and I was right on the trend. Doesn't that suck? How many times does this have happened to you? Get it? So that's the reason, again, I went into my maximum allowance. In this case, it was about 1200, which was all the way back there. So I thought I was going to get stopped out, but no, I didn't. God helped me there. That's a 1 hour chart. The market kind of reverted and it just kept going. And from there on, I mean, I don't know what is your objective at that point, but this is basically what we're looking for on the long term on the way down. And basically, back to a 4 hour chart, I'm holding the position. But Carlos, this is pulling back up and whatnot and whatever. That's fine. I already liquidated some of the positions. If I get stopped out, which in these terms, again, I'm adjusting it now at this point. If I get stopped out, I just gave back a little bit of the profit that I already made, right? But the important thing is this opportunity panned out. You cannot tell me, and you can check the videos again, because I tried to do these calls before they happened, right? That was a 415 points forecast. Oh, but you lost in the first two. If you're like that finicky and focus only on the negativity, then bro or girl, you gotta, it means that you're not successful, right? Yes, that's part of the business. I lost control, 70 points here, 70 something point there. Wham, one trade setup, allow me to recover plus do some profits. I don't know about you, but this is the point of how we should treat the market as a conglomerate of a potential personal portfolio. Instead of focusing on one market, then you divide that. And I explained to you, I traded gold, I'm trading crude oil. That's a portfolio. Okay, so anyway, here we are. What is the key factor? I'm going to give you this. I'm going to leave you with this. There is a 25,948, 25,850 area. This is a big chop zone on a 4 hour chart. We need to clear that 850 in order to close the gap. While the market stays within this zone, just look at it this way, right? Like such, between 191 and 359 and 949 and 850, between these two, this is a chop zone, massive. So your playground is providing you an average of 200 points to play around back and forth, right? If you want to go that route. But if I take a closer look at the OT, VIX is positive. I'm only going to be looking for short positions. And my goal is to be hitting those 946, 882, 850, or whatever on the way down. Right? Same thing applied on the ES. Look at this. Same thing. You see this zone right here. Okay. Same process. I'm aiming for this zone on the bottom. Right? So this is a zone of resistance right now. So basically I can just come back. Actually, I can just do this now. And this at least is just locking some profits as we speak. All right. In this one though, I'm going to liquidate one of the three because we're just hit one slingshot. Boom. There you go. The next one is they did went and close the previous day closed the gap. They closed the gap today by going and feel half of this. They filled half of the gap, right? And that hasn't happened on the NQ. This is another tell that I'm pretty sure they're most likely going to do it on NQ eventually. I see crude oil moving higher. I see gold moving higher, slowly and steady. So it seems like this might pan out for me eventually, and hopefully, and finally, crude oil will get out of the rut and move higher accordingly. In the meantime, this is all we have, all right? And with that being said, you can take a screenshot. Next target on the ES is going to be 68.20, 69.98, 67.98. Sorry, 67.52, 67.33, and so on and so forth. That's a big, huge zone right down here at the bottom. That's where I'm after. Sorry for the long-winded video. I wanted to cover everything in here. This is kind of a master class of forecast analysis, processes, understanding the concept of the movements, and trusting the system in such a way that it doesn't eat up your life or your mindset. I'm going to drop to a 15-minute chart. Look at this nice rotation. Today, they need to go and fill the close of the gap. That's when I'm going to be closing one of those three, right? Right. So here it is. This was 4 o'clock, close of the market. They need to close that gap. Look at the OT. Look, 400%, 3. You see the negativity going? Pay attention before I leave in. This wasn't like that a couple of minutes back. But I knew that was going to happen. Why? Because, come on, the VIX. Because the VIX was positive. Help me predict what to expect from the indices. With much love, this is Carlos Diaz, and I hope to see you in the next video.